Good afternoon, everyone. We'll just give it a couple of minutes, just let people join. People's coming in at the moment, so we'll just let them join, and then we'll get started. Just for the people that are already here, if you want to use the chat box, obviously it's there available for you just to say hello, tell us where you are, maybe tell us what your business is, what you work as, just to give myself and the panelists an idea of who we've all got in the room today. And as I say, we'll just get started in 1 minute. All right, I think we'll just get started. People are still able to join in, and just I know, conscious we've got a lot to cover today, and we are recording this webinar, so it will obviously be shared after the event, and I believe it's going to be uploaded on to Float's YouTube channel as well. So there'll be a number of places you can view it from. So just go over some housekeeping. As I said, you can use the chat box. If anyone has any questions, which we'll deal with at the end, there's a Q&A box at the bottom of the screen. And as I said, we are recording. So I think without further ado, I'll pass over to Nick from Float, who will take us through today's presentation.
Thanks, Craig. Welcome, everyone. Thanks for giving up your time this afternoon. It's ever darkening. I don't know where everyone is. I'm just going to cover some introductions for everyone. So my name is Nick Cole. I am the CCO of Float, but just before you think that I've got no idea what I'm talking about from an agency point of view, I have spent more than 20 years in that industry. I was a board director and managing partner of a couple of different agencies. I made the move over to Float a couple of years ago, and Float is a cash flow forecasting and scenario planning platform for Xero, QuickBooks, and Free Agent. We also have Mark Probert from Agencynomics and Cactus. Mark is the managing partner of Cactus, which is the UK's leading agency growth consultancy, and also Agencynomics, which is Europe's largest free peer network for agency owners. So immediately, you can understand that Mark has got some valid input into this conversation. He's got a wealth of experience of advising agencies of different shapes and sizes on smart financial and growth strategies and practices. We also have Jake Murray, project manager and sometimes designer, I believe, at Outlaw Social, which is an Edinburgh-based brand marketing agency. And his focus is very much keeping things lean and efficient and making sure Outlaw delivers impactful work. So again, we've got some relevant experience to bring to the table. So this, I guess coming into this, we understand that 2020 has been a uniquely challenging year, and that the challenges and fallout from this year will continue into 2021. So when we were thinking about the title of the webinar in terms of planning agency growth for 2021, this isn't meant to paint a falsely rosy picture. We understand that there are challenges still out there that will continue through into 2021, but there are also real opportunities to grow, particularly if you really plan and focus time in key areas. And that's what we're hopefully going to cover off today, is where you can validly and efficiently spend that time. So we're going to cover 5 key areas today. We're going to try and keep this to be some more conversational than us just presenting. So the areas that we're going to cover are how to keep and grow existing clients, how to win the right new work, how to stand out in a crowded space, how to budget for 2021, and then we're going to talk a little bit specifically about cash flow and why cash flow insight is important. So without further ado, we'll dive into this first area, which is how to keep and grow existing clients. So just to set things up a little bit before we get into the discussion, Well, I spent most of my agency career in new business. So from this point of view, it's sort of understanding, right, well, how do we balance the new clients with the existing? Some statistics around existing customers, which are the probability of selling to an existing customer is around 60 to 70%. If you read a lot of online reports, while the probability of selling to a new prospect is much lower than that, 5 to 20%. And existing customers are 50% more likely to try new products and spend around 30% more when compared to new customers. I also found a really interesting statistic, which was only 40% of companies have an equal focus on acquisition and retention. And that number actually potentially drops to 30% when we're talking about agencies. So, Mark, what would you recommend in terms of focus on keeping and growing those existing clients? Why would you suggest that, and what would you suggest that you focus on from this point of view?
Okay, thanks first of all for inviting me onto this webinar. It's really good to be here with you guys again. Yeah, I suppose for me, it's as you said, Nick. Often an agency is chasing that new sale, and as we probably most of us know, us with a few more grey hairs, you know, it's much easier to win that new sale from your existing clients. So I suppose to your question, how do you go about that? You know, now's kind of the prime time, isn't it? Like, we're starting to get a little bit more, maybe perhaps certainty of what may be happening with the virus, the vaccine, etc. We're perhaps getting a bit of a feel that actually into next year, new business is going to start happening again. I'll come back to your point around clients versus new business in a minute. We think the economy might start picking up again. I had something on the news last night. They actually reckon by the summer, or in fact late summer, the economy will perhaps be flourishing again in certain other sectors that have really killed off recently.
Yeah.
You know, so there is positivity out there. And I suppose what I would recommend, and what I see happening with some of the clients that I work with that are good at this, is it's those account managers and account directors and owners of the agency really spending valuable time with their clients, and it not being necessarily charged work, which is something I don't always say. But at the current time, I think it's very much it's been about protecting your clients, not really going at it from a point of view of the commercial side of it for the moment. It's been protecting what you've got this year. And now leading into the new year with, you know, clients still a bit wary of what to do, what to spend their marketing on. You know, I'm going to come onto this for the agencies later. I think a lot of agencies are still unsure exactly how they go about marketing themselves next year. You know, clients will be the same. You know, it's spending time with those clients. It's spending time really understanding what their strategy is going to be for the new year. You know, and the account manager's been a focal part of that. So that's an area where I think people have really got to kind of ramp up their time over the next month before, you know, I know a number of people are feeling exhausted at the moment, probably waiting for Christmas and whatever guise that will be. But, you know, we've still got another month. We've still got another month to go. Businesses aren't going to stop, hopefully.
Yeah.
You know, so definitely the account management side, much more interaction, the strategy side of it. And by having those strategic conversations, you know, it's more likely you're going to get that strategic work, not just the rollout work of the normal work that you get. So there's opportunity there into next year, I think.
So Jake, what are you guys doing in terms of, you know, doubling down on those relationships with the existing clients, and, you know, what have you done in terms of balancing your existing clients and trying to get some commitment and more work from them versus that new biz?
Yeah. So yeah, first off, again, thanks for having me on. Again, it's a last minute stand-in, and it's also made me realise I need to change my LinkedIn profile picture because it looks a bit mental when it's on a panelist screen. So
I quite like the shades, actually, Jake.
It is good. It's like hide the face. So yeah, it's good. So one thing I've been focusing on with our account manager, she was on holiday for 2 weeks, and I said to her, get on the phone and talk to kind of key clients for 5 minutes and just ask them how they are. You know, so light touch, and it allows the clients at that point to start bringing up any kind of worries naturally, or anything that's good happen naturally. So really light touch, building a rapport with your clients I think is mega important, because if you establish much more than a business relationship, but also kind of a friendly personal relationship, you've got a much greater chance of holding on to those clients. From terms of a growth perspective, Mark's right, you know, like focusing on I think on strategy as well, that we're now in a time where people have been very concerned about spending, quite rightly, and about the future. So they need to feel secure that what they're putting money towards is going to do them good. So whatever you're doing as an agency, although it can be tempting to go after just selling a product, you need to make sure that you're going after a solution that will actually fit their business need. So part of that is obviously getting to know them and getting to know what that business need is. Otherwise, you really run the risk of just selling a solution that doesn't actually have a problem attached to it, which ultimately leads to frustration from the client's side of things.
We implemented a concept at one of the accountancy practices I used to work at called a CEO room. And it's something we've mentioned and put into some of the agencies I worked with before, where the CEO room concept was about us as an accountancy practice. And by the way, accountancy practices are quite similar to agencies. I always get that into any talk. Probably worse at selling on value than agencies are, but anyway. And the concept of that CEO room was that you would get the decision makers in the company into one room. Well, at the moment, it's no different. You can do that virtually. Yeah. You get the heads of the brand into the room, and you get the specialists. You get the 4 or 5 specialists that you've got in your agency. Now, in accounting, that was, you know, for example, a tax expert, maybe myself on audit, accounting, you know, advisory work. And you would just sit back and listen to the direction of travel that company was going. And by the end of that conversation, probably an hour or so, you know, you used to be able to do a bit of whining and dining as well afterwards, but you can't so much now, obviously. You know, you would know where that company was going, and you would have been feeding into that meeting with, oh, so I see, so you're setting up in Brazil. You know, it's funny, you know, we've got offices out there, or we're part of the network out there where we can loop you into our tax, you know, and suddenly you're adding value all the time in that conversation. And I think that's a concept that, you know, now's the time to be doing that with your clients. Have that high level strategic meeting.
It is definitely demonstrating value. You know, if you think about, you can add value in that sort of way, Mark, but it's also, you know, potentially reminding your existing clients of the value that you provided them in the past.
And also the services. I think
absolutely.
An agency often, in my opinion, it doesn't tell its clients often enough what it does. You know, and it also sometimes doesn't say clearly what it does, which is a whole other probably another slide. But you know, that's something that, why not? Why shouldn't you be telling your client? You've been looking at this, I don't know, you've been investigating TikTok as a business operation for a while. Have you actually spoke to your clients about it? You know,
it's an age-old marketing mantra, isn't it? That you need to repeat in terms of, you know, getting that across. And so, you know, remind those clients what you've done for them in the past. Remind them of successful campaigns. Remind them and show them, you know, what you've done. Come to the table with some ideas. What about how do we sit, like, before we move on, because we've got a lot to cover. How do we sit with, you know, okay, we need more work. The clients are pushing back. They're in trouble. Can you lower your rates? Like, where do we sit in terms of, can you do it cheaper? Can you do it quicker? Like, what do we think about that? Because that's bound to be heard, right?
Yeah, interestingly, this is something that we've been doing with a lot, and I think this is part of the kind of relationship, because I think any effective business relationship has to have mutual kind of trust and respect. So if you just kind of, you know, drop prices, that's kind of, you're putting all the power in the kind of client side of things, and it's ultimately not very good in the kind of long run. That being said, so I kind of come from as well from a slight like agile product development kind of background. One of the key things is that time and price and quality are the non-variables. What you can get rid of is functionality. So you could, you know, have honest conversations with your clients and say, look, okay, we can reduce budget, but what we can't do is retain the same level of service, and then almost go through a prioritization of what do we need to keep and what can we afford to get rid of. Because I think, yeah, ultimately dropping price makes sense in the short term, but you will feel the effects of it, you know, long term when you can't raise them again.
Yeah, because that's a hard thing, right, Mark? It's a hard thing to go back in 6 months' time, maybe to what you've been hearing today in terms of those economic projections, and say to a client, "Oh, by the way, you know, we dropped our day rates by 200 quid, but we want to put it back up again." Well, wait a minute, what?
I think you've set a precedent, haven't you, which you can't get back from. I'm quite strong on this area. I completely agree with Jake. I think once you've identified who you are and what your rates are, that's what you need to sell at. Most agencies, say for example, a number of small agencies might say my day rate £600. I bet most of them are actually selling at £300 or £400. They're already over servicing and not charging enough. So actually to go any lower and drop your rates, you're going to have a business that isn't surviving itself, let alone, to your point, Nick, about protecting your client, and they might not be around. You're actually shooting yourself in the foot. So, there is a certain rate which you cannot go below. And I think you are creating a rod for your own back. And also, also the marketplace is a small marketplace in some ways. Once you've released your rates, they get out.
Yeah, of course.
Yeah,
and there's that precedent there. And, thinking about that bigger picture, I know that, a lot of businesses and not just agencies have been thinking like what's in front of their face. And actually, what we're talking about here is planning for 2021. It's a bigger picture piece. And so, if things are going to recover, which, they should, we've had a few bits of good news over the last couple of weeks after not so much good news, then what you really don't want is to set precedent now that's going to make it harder for your agency to recover and or grow. Just firefighting now is going to cause you problems down the line as 2021 progresses. So
there is the point, and I think Jake alluded to it as well, though, that you can come up with some other ideas for your clients that are short, sharp, snappy projects. You can say to the client, I know you haven't got the budget to do this, but actually, look, I think this is really going to help with whatever it is, your marketing, whatever, then actually, why wouldn't you go and be proposing them at the normal rates? but you're actually saying, look, I'm aware you can't spend 50 grand on this web platform at the moment, but you might be able to do this, this, and this that actually, really benefit, or we think from our expertise.
So be proactive with those ideas.
Be proactive, and the client's not going to tell you off for being proactive.
Yeah, true. I'm gonna just move us forward, because the next topic is related for sure to this. Just going to recap what we've talked about just now. So what we've covered is really doubling down on those genuine relationships, making them feel heard, to your point, Mark, around that sort of that sit down and listen to their problems. Try and get that certainty and commitment from existing clients, show them that value, demonstrate how you've been valued. Don't drop your rates. Be disciplined, and push for more strategic work. Moving on, I guess, is okay, well, there's your existing clients, but unless you're in a very privileged position, then you are still going to need to augment that existing client work. You're still going to want to be out there looking for new work. You do still need that solid pipeline of new clients and work. So how do we best strike that balance between, if time is finite and the team's time is finite, how do we strike a balance between making sure that we're doing a great job of servicing those existing clients and being out there looking to win new work? Jake, what would you suggest there in terms of how to balance those things?
Yeah, and it is a tricky balance, but obviously you do need to spend the time finding the right people. One thing that's kind of worked with us recently, and this ties into building relationships, is this focus on kind of more strategic work, and it's about how you position your agency. We found that we've won some good clients recently, and they've come to us and said, we've went with you despite you being more expensive because you took the time to get to know us. So actually, the relationship building is important in keeping clients, but also in getting the right people. Because ultimately, what you don't want to do is run out, grab the first clients that's kind of like waiting for implementation work, who are then going to drive you down on cost, take up all your time and your free headspace. You know, it's that opportunity cost of, yeah, you've got revenue, but they're just taking up your life. And
so is that a matter, Jake, you think, of like understanding as best as you can that whole pipeline and the sort of timelines of that pipeline and the opportunities that are in it, rather than taking each thing, as you say, as it comes and making a decision just based on that one thing in front of you as to whether we need new work, so therefore we'll go for this and we'll go in cheap? And is that a matter of understanding the bigger picture?
I would say so, yeah. It's a really difficult balance to strike, though, especially when you've got kind of people to pay and things. But I think almost like stay in your course. So we've kind of internally made the decision that our clients will start with strategy. Yeah. So we understand that, like, when people come on, they come at that stage. So that's why when we're putting a message out, we focus much more on that, so that we're getting people in at the right stage, and making sure we're not ending up with the clients who do just want kind of baseline implementation work completed. So yeah, you kind of need to know what's best suited for you, and then how to position yourselves within the industry.
I guess sort of coming back to the point that we talked about before this was, really what you want is clients that are going to hang around. There's always maybe room for the odd filler project, but ideally what you want to be winning new work that isn't just a one and bust, that it's going to be a more strategic relationship that's going to add to that portfolio of existing clients, rather than just being okay, there's a thing there we can fill a gap with. And like, Mark, what would your advice be in terms of like that strategic play
in terms of winning new work?
Yeah,
I think a lot of this, obviously, people will talk about their own marketing, won't they? But I think Jake's hit the nail on the head with positioning and strategy and so on. There's an awful lot of chat out there at the moment with, do we need to reposition ourselves because we've just been hit by a bomb this year, and therefore do we need to change slightly? Do we need to have a different tact, a different approach into 2021? I think for me, it's using this time, if you haven't already, to be really clear on who you are, and doing the simple things. And what I mean by that is, you mentioned pipeline. An awful lot of people do not look at their pipeline in the history of where it's come from, and they just assume that it's come from certain sources. So a lot of what we've done over many years, we did a big survey at the end of last year in Cactus, is look at new business and the sources and where that's come from. And we have this methodology. We used to call it 30 30 30 33 33 33 10 30 30 30 10, sorry, and we now call it 25 because what we're seeing is there's 4 areas. There's Nest, networking, events, speaking, thought leadership, strategic partnerships, referrals, which everybody gets their work from and always apologizes, and then marketing activities. Yeah. So everybody says, oh, the website brings in loads of work. Yeah. And we've all heard the agency stories of websites, how long they take to bring in work. But it's a small element of your marketing, or historically it was. A lot more people are getting a lot more activity on LinkedIn now, I suppose. But people often overlook the fact that they have got a lot of referrals in their history, and they've got trusted people that trust them, that are advocates to them, but they don't spend the time with those people. They don't connect to them every quarter and catch up with them. And actually, I think for us, it's very much, if we ever start on day one with a client, it's looking at positioning and where you're going and your purpose and all this, but it's also looking at, so where has your work come from in the past? Because it's going to come from the same places again. If you work on it, you can also amplify it, obviously, with your marketing plan and looking at other things. So for me, it would be, go back, look at the past, and take that as one thing to zone in on going forward.
And I guess this is just generally, like, from a new business point of view, is be disciplined with it. So there's very much,
I'm ever the accountant, aren't I? There's very much a process behind a lot of things. Jake will, I'm sure, say that in the work that he does. And a lot of well-performing agencies have got solid and sound processes in the background, and that's why they're so slick at what they do and able to make good profits and grow and invest and so on in more people and tools. But yeah, I think for new business, there is a bit of a process. And part of that survey we did, we looked at where work had come from. And out of, I think it was nearly 40 areas. It was like 300 agencies in the UK or something completed it. The top 80% of work, came from 12 lead sources. 12 lead sources, and that was at the top: friends, family, referrers, your close network. And that's often the things that people apologize for getting that work from. So create a process around it, create a referrals process. My colleague has a whole course on that. It's something that gets so overlooked, and yet you see it in the pipeline. If you look back, you know a lot of good people, you've got trusted people you know in your communities and so on. So I think for me, it is creating a bit of a process around that area as an example.
We talked last week when I guess we were chatting about, this webinar today. We chatted quite a lot last week about, well, making sure, which we've touched on a little bit, is focusing on what you're good at and surfacing what you're good at, and making sure that everybody knows that. But also then the partnership side of things, which I think has really come to the fore during the past sort of 6 to 9 months, which maybe wasn't always, certainly in my time in agency, it wasn't always something that you thought about, is which other agencies can I partner with. It was always felt a wee bit competitive. And I think one of the good things probably to come out of the last period is people exploring those strategic partnerships and co-marketing opportunities with other agencies that are also really good at what they do. What have you done any of that, Jake and Mark? What's your feeling on that?
Yeah, no, I think it's better, because ultimately I think if you can, I think I said this when we were going over stuff, if you over promise to your clients, you're going to under deliver. Right? Whereas if you really niche down and do what you're good at, they'll come back to you for it. So you're better doing one thing really well and making someone happy with the product, because they'll come back. Which does mean that you might have to fill in a skills gap or a capability gap with a strategic partnership. So it's something we actually do quite a bit. Like we partnered with a new PR agency. So rather than us trying to take on PR and all this other stuff, we're quite happy to then refer and have a strategic partnership, which means that we know that when we pass on a recommendation for a PR campaign, that the person doing it is going to do it really, really well. But then it means that when someone comes to her with branding work, she passes it to us, so it's creating that kind of virtuous cycle of, good industry members all looking after one another. So it's not just competition, you can create a really good network based around the kind of creative industry.
Yeah, and from my perspective, I'm not the creative eye. Okay, Nick, you probably are, out of all of us. No disrespect to Jake. But the amount of websites I've looked at, I suppose, over the last 6 years, and you still can't tell what the agency does. And I think, if there's anything else to take from this today, then I think sharpening that pencil as to the service offerings you are experts at is the right thing to do, because actually quite a lot of opportunities that are out there at the moment for the number of agencies we work with. It's the specialists that are winning the work. It's not really, and I'm talking, our client base is small independent agencies, small, medium independent agencies. Our community is in the main small, medium independent agencies. That's what it was founded for, to inspire the independents. And it is the specialists. Now, whether that might be sector specific, that might be service line specific, or whatever. If you've got both, you've almost got a stronger agency, I would suggest, in some ways. So, that's something I think is you've got to zone in on. And then, to the point you raised and Jake mentioned as well, definitely the partnering bit with other agencies. I won't name names, but 2 of my clients that I work with, both heavily involved in the insurance sector. One on the build side, one on the branding side. A lot of this year co-marketing together, webinars together, sharing client lists or opportunities together. And it's definitely been the year for that. This year more than any other. I think people are wanting to help each other, aren't they? So, and one other thing I would say, because I always get asked this question: if you're going to do a partnership agreement, what contract do I need? So it's quite amusing, because I had a call with somebody this morning who said, yeah, I need to get a contract signed up. And I said, well, do you really know the other agency yet? No, not really, but I need to get a contract, and it needs, what does it need to be? Is it 10% of fees? And in my opinion, that's the wrong basis to go into the partnership. The partnership should be about getting to know each other, relationship building, really understanding each other's agencies. It shouldn't really be for that, or we're going to pay you, 10%, 600 quid or whatever at the end of the month, every month.
So again, don't jump into it. I guess we've talked about
Take your time.
The first project that comes along, or the first pitch that comes along, and thinking about that opportunity cost versus existing clients and other new business that might be better. That, I guess the same premise goes for those partnerships then, right? It's like, kick the tires, don't jump into bed with the first agency that comes along. Think about that culture, think about that skills match. Yeah.
What is there? There's 20 odd thousand agencies, isn't there? There's enough to go and find, but you've got to take you got to take your time. But what I've seen, maybe Jake, maybe see the same, is some good solid partnerships have worked very quickly this year, because people have not been resistant to jumping on Zoom, 4 times in 2 weeks to get to know each other. So things have happened quicker almost, because there's not that, oh, we've got to go meet you in a bar in London, and it, can only do that once every month. I can quickly jump on a Zoom and it's happening quicker, but still take your time to find the right ones. Definitely. Yeah.
So a little recap of that. Well, obviously we can provide all of these slides to everyone if they need. So don't rush into that new work just to bring in the first bit of revenue you can potentially get your hands on. Understand that pipeline, try to look at the big picture, create that strategy and communicate it, stick to your guns, focus on what you're good at, don't overpromise. And then that exploration of partnering with other agencies, co-marketing, sharing client lists, having other people basically sell what you do. Okay, cool. So moving forward, it's all, you've just talked about there being 20,000 agencies, Mark. So we're talking about, it is a crowded space. There is a big challenge at the best of times about being the one, as someone that's pitched more times than I've had hot dinners, then there's always that in the mix. It's like, well, how do you stand out? Like, how do you stand out from a marketing perspective? And then how do you stand out once you've got that opportunity? So what would, again, we were talking about this last week in a certain old, an old sort of, the oldest thing in the book, I guess, came up in terms of cobbler's shoes, Mark, when we were talking about it. And, we were like often, and I've definitely been, definitely experienced this and done this, is like, don't ignore your own advice. So often agencies will be the last people to sort their website out or to get the case studies in good nick and put them out there and, practice what you preach. So that was one of the big things that came out of, that standing out, is make sure that you practice in what you preach and you don't ignore your own advice. What else is there? Like, what else were we talking about last week? It's I guess a carry on from what we were talking about in terms of sticking to your guns and what you're good at.
Yeah, no, absolutely. I think, I know it sounds cheesy, stand out by being good. Right. There's a lot of people who will, and I think as well, because in the kind of creative industry, there's not necessarily, you don't have to have a license to practice it. So there, almost anyone can slap on a wee website says I'm a marketer. But the thing that differentiates, a good one from a bad one is the quality of the work. So, spend time making sure that your output is as good as your sales pitch. And really differentiate that way would be kind of like my main one. But as you said, following your advice, I run strategy workshops with clients, right? And I'm always going on about pricing strategy and positioning. And it's true. I mean, like, because you're busy, running an agency, you will sometimes go like, yeah, I could let that price slip. But then all of a sudden you're ignoring your own, your own expertise and your own advice, all these other people. So yeah, great point. Make sure that you're kind of practicing what you preach. So if you're telling people to work on a solid pricing strategy or productization, make sure you're doing it yourself. Otherwise, you will seem a bit like a fraud. Yeah.
We talked about, revisiting those case studies a bit, and often, you know, your own website and your own stuff is the last thing that gets attention. And whenever a client asks for something, you might have a bunch of your own things. I've been there, done that. You know, a bunch of your own agency work within your project management stream, and that's the first thing that gets dropped when a paying client asks for something. So, you know, look at those case studies, surface that value, tell relevant stories. You know, think about where you've had some success, to Mark's point, and think, right, well, actually these sectors are less affected by COVID than these ones. So how can we surface some value that we've provided to clients in that space? They might not be top of the list. They might not be front and center on your website. You know, there might be a year ago or so that you've done it. Again, Mark, we were
Yeah,
talking. Sorry, dude.
No, I was going to say, I wrote down a few points actually, as you were saying. For me, the first thing is the strategy and the positioning bit. That you don't have to go and re-energize yourself. Sorry, you don't have to go and rechange yourselves, but re-energizing yourselves is a good thing for me. And that to me is taking time out. You said cobbler's shoes. Yeah, you said cobbler's shoes. What do we do at Cactus? We allegedly advise and help agencies grow. Yeah. And what do? We sit on boards with strategy, all the rest of it, tools, processes, whatever. What have we done every 6 months? Taken time out to take 3 or 4 days away together and strategize about where our business and agency economics, etc., is going. And that's invaluable. You couldn't unfortunately do it in person at the beginning of this month, but it's invaluable. It's also invaluable to some extent getting external eyes on that. So we've had a couple of people look at some of the things we're trying to do. When we launched a community, you know, that was beta tested by a couple of experts in the field to see if it was of value. So it's well worth, I think, taking the time to take the time out and properly think about where you're going. Then it, I suppose, to me, it comes on to having a robust marketing plan. So let's not go into all marketing techniques and so on, but for me, that would be as simple as all the things you can do in marketing down the left on a sheet, all the months along the top, what you're going to do, when you're going to do it, and what you're going to spend on it. And I think a lot of agencies at the moment aren't having to spend a huge amount of money doing their marketing because a lot of it's, you know, content led internally. But those that are spending the money in the right areas, you know, are probably investing, we would say, up to 5% of their gross profit on marketing. I would say if they do it right, they're the ones that are going to stand out. They're the ones that are going to stand out because they're investing money and they budgeted for it. Yeah. You know, it's not a risk. They'll cut it if the revenue doesn't come in, perhaps, or perhaps they won't. You know, and they've got somebody in-house, the cobbler's shoes bit here, focused on their own marketing, not somebody that works on client work doing a bit of marketing as and when they can.
We had this chat, I guess, about we're going to move on to the budgeting piece, but you know, making sure that there's a temptation to just cut your marketing spend, you know, and
well, the history tells you, doesn't it? You know, I think the last talk we did, you know, I managed to do my research for once, and you know, the Post and the Kellogg's Post anymore. Who knows Kellogg's? You know, Kellogg's marketed Rice Krispies in the recession. So you know, I think the other thing is, you know, everybody will, I'm sure, be aware of this one to some extent, but it's the personal brand, isn't it? It's the personal brand side of things at the moment, certainly in the agency world. You know, we all know some influencers that are out there. Some have moved on from their agencies recently, but you know, that in itself is, you don't have to be an extrovert to have a personal brand. You know, some great guys that we know, Jago, Ash, for example, they work in this area and helping a lot of agencies around the UK. You know, that has become a real thing, and it, you know, it's something that a lot of owners struggle with. You know, but it is an area that you can work on and you can improve, and you can bring yourself, perhaps to the point at the beginning of the talk, you know, to doing a talk, even if you feel uncomfortable doing it. You know, we all feel uncomfortable.
You know, that comes back again to, you know, that it ties into a lot of things we've already talked about in terms of that awareness, in terms of that partnership and the likelihood to be able to create those and breed those, and you know, without going over what we've already talked about, those partnerships often, you know, it's a relationship business, right?
Totally, yeah. And there's one other quick point as well, was I'll go back to the website thing again. A lot of agencies hide behind that as that's their marketing tool. And we tested this with a client, and we took down their website for 3 months to see what would happen. and I was about to swear then, they panicked a lot, and they actually got a lot more leads and better quality leads by doing that. And the reason was it spurred the owners on to get out there and do some marketing, because they were like, we've got nothing to hide behind. So I think that's something that perhaps some others might need to take heed of.
So again, a quick recap. We have, don't ignore your own advice. I mean, the lead one is the cobbler's shoes. Stick to what you're good at. Don't go pivoting necessarily left, right, and center. Create that marketing plan. Make sure you're surfacing value, demonstrate that value, build that personal brand, and think about those partnerships again. So, Mark, you'd mentioned the word budget. So thinking about moving into a real territory of comfort for you is in terms of how to budget for 2021.
Or horror given this year.
Yeah, a lot of, certainly I never enjoyed budgeting, when I was at the sharp end of this from an agency point of view, but where do you even start for 2021 given the situation?
Well, it's probably a little bit like I touched upon earlier on, actually. I think there's a little bit more of a runway now, because for any accountants on this call or business owners that are doing the finances, it has been a bloody nightmare this year, hasn't it, with trying to budget everything, work out furlough, deal with all the HR issues, work out what funding's available. Oh, it's changed again. Job support schemes, oh no, it's back to furlough, on a Friday night as always. So it has been exceptionally difficult. What we have been doing with most of our clients is pretty much doing a rolling monthly. So we've still got a longer term picture, and I'm still an advocate of always having that. I think you should always have an objective for the year ahead, some numbers that you should be targeting, some numbers that the sales team should be targeting, or the client account management side should be trying to aim for. But realistically, this year's that's been difficult to go much more than a month or two ahead. So and it's been the full dawn of furlough and that manipulating the numbers almost. People are making profits and they haven't really been. So now we know where we stand for a bit. We know the furlough's in, potentially it could change. I think the end of January, they might reduce it back down again. I think it was Rishi's comments. Still got to watch out for that. But I think you've got to sit here today and go, this is what we want to aim for next year. But we also need to sit here today and do a scenario B, which is, this is what we think could happen next year, on the sort of worst case. And then we need to think about, 3 months ahead. Let's do a forecast. So 3 months ahead, take account of the furlough if we're taking that scheme on at the moment, and keep that rolling. And you've got to have, the thing for me is, it's all very well saying budgeting. An awful lot of agencies do not have a finger on their pulse of their pipeline. And they say they do, but they don't. and that for me is an absolutely critical document, whether it's in a CRM or it's in a spreadsheet or whatever tool you use. I've probably said this before, we have our own tool we've built over many years, which has a lot of insights. That is lacking in a lot of people's armory, and therefore that is very hard to budget. So I think it's two documents for me. It's the budget, and the pipeline tool.
So in that pipeline, I guess, understanding coming back to previous points of, what's there from those existing clients and what's already committed to, and what's tentative.
Yeah, sorry, at the risk of taking over this section, Jake, sorry. The pipeline document needs to be a couple of things, doesn't it? It needs to be one which is confirmed revenue that you're absolutely signed up 100%, you're billing it. I won't come on to work done because that can confuse people, but you're billing it, yeah. Aligned with another tab which says this is our pipeline. It lists out all those areas you're getting the work in from. It's got an aging, it's got qualification probably, it's got waiting, and it's got what may drop. And that may drop figure needs to tie in with what you've won. To me, that sounds obvious. To a lot of people, it's a struggle to get to that point. Once you've got that, you've got a number that in theory you're hitting. Once you've looked at all the stats of where you've won and lost stuff over time. Yeah. So that can then help influence decisions and, budget making, but also decisions. And for me, it's tying those two documents in.
We use Pipedrive, and I use Pipedrive in the previous agencies to do that. And you can weight things, and you can build that pipeline in terms of what is likely to happen, and then moving forward. I guess you'd mentioned scenarios, and is that longer term picture, but also short term picture, rolling picture as you go in, and scenarios within that. So is that something, Jake, that you would advocate as well in terms of, right, okay, this is the grand plan, but within that we've got this, and then within that we've got a couple of possibilities?
Yeah, no, absolutely. On the risk of sounding intensely boring on this on this webinar, I'm a fan of risk analysis, right? So I think it's a good point to also look at, yeah, as we said, where your money has historically come from, and evaluate, you know, how much stake does any one particular account have in your business. So it could be like, you know, if you're in a position where you're actually fairly buoyant, but you've maybe got one or two key accounts, you're in a fairly risky position, because actually this is something that happened to us, not the risky position. One of our bigger accounts made an absolutely insane business decision, where they lopped off the profitable side of the business to concentrate on another part. And we got a phone call from them saying, we're going to have to freeze our marketing because we realized we've got no clients. So the interesting thing is they were a good, you know, really, really good client, but you can't control what they do in terms of business. So when you're budgeting, make sure that all your eggs aren't in one basket, that you've got a kind of a wider portfolio, so that if one client falls off, they're not going to take your business.
Yeah, I've seen this firsthand, Jake, in the previous agency I was at. So, you know, that is a risk. It's a new business risk, but it's a budget risk as well, because, you know, you need to be planning to try and mitigate that situation. I'm just conscious of time. So we're going to move on, because the budgeting piece will flow through into the next section. Just a little recap on the budget is, you know, planning those stages. We've talked about that long-term piece. We've talked however you're going to do it with that pipeline, and making sure that you've got those sort of percentages of certainty. That marketing budget we talked about, like, don't be afraid. You know, Mark, you talked about in-person events are going to kick in at some point. So if that's been a previous tactic and part of your strategy, then start thinking about when that's going to happen again. Scenario plan A, B, and C. You know, be on it. I know that this is something that you're a big advocate of, both of you guys, is making sure that your numbers are up to date, so that however you are forecasting, and I'm going to talk a little bit about float in a minute, that those numbers are up to date to give you the most reliable picture possible. And then, you know, that trusted advisor, which I know, you know, we certainly value that. And whoever that is, whether it's someone within the business or out with that business, it's definitely worth having someone with a finger on the pulse if that's not your comfort zone. So we're going to talk a little bit about cash flow now. You know, I'd mentioned what float is and what float does. We're a cash flow forecasting and scenario planning tool. It was interesting me making the transition from agencies, and you know, you might think, well, I'm obviously biased given that I work for float, but you know, I do know from 20 plus years of working in agencies that cash flow is a perennial challenge for agencies. It is, like, the nature of how many agencies operate exposes you to potential cash flow pitfalls, project-based income, you know, project overruns, potentially fixed price contracts that, you know, more clients might be looking for that at the moment. Late payments can all lead to that cash flow pain. So, you know, how can we help mitigate this? And I think one of the learnings that I had was that you often don't know what you don't know. So actually, in any situation, I think you're better off knowing. So anything that can provide you with a bit of clarity, and you know, that budgeting piece that we've just been talking about, and that forecasting process actually uncovers and focuses you and provides that knowing where there might be have previously not been knowns. Is that something, Jake, that you guys do, and do you know, with Mark or yourselves within the agency?
Yeah, so we work, you know, quite closely with our accountant. Actually, she's brilliant, and they really help us kind of get an idea of exactly, you know, how much money is in the kitty, what we've got to play with, and yeah, having somebody that's available to give you really good insights makes you make better decisions. Otherwise, you're kind of in that stage of just being reactive to with your cash flow. So that's always a dangerous position. So no, absolutely, I think whether you're using like a tool like yourselves or or you've got a trusted accountant, find somebody who can fill in your knowledge gap, especially when it comes to cash flow, because historically creative agencies aren't always the best at the business side of things. So find somebody who is and who can give you honest insights into the cash flow. Yeah, definitely.
Mark, what would you say about those what ifs?
Well, I think for me, there's quite a few of those. For me, you always need a cash flow at least 3 months rolling. A lot of agencies, obviously the project-based ones, don't normally have that many projects in the pipeline, a couple of months or more ahead. So you need that cash flow for at least a rolling 3 month. I think at the present time, a lot of agencies a little bit swimming in cash because of the government loans, the furlough, etc. But there's debt looming. There's debt looming of time to pay arrangements for VAT and PAYE, and the deferral of the COVID VAT quarter and all that. And then eventually, if they do have to repay them, the loans, there's still a bit of a debate about that, I know, at the government level. So you do need a cash flow. You do need a cash flow. You need a cash flow in a system that's going to help you plan out different things. And I think the amount of times I've seen an owners sort of in a meeting pick up their phone and go, well, the cash is okay, and you go, well, yeah, but how do you know that? Well, it's okay, it's in the bank at the moment. And you get that from an owner's perspective, that's understandable. I get that. They probably know what's in their head. But to then as a team, talk about the strategy, where the agency is going, should we acquire somebody? That often gets overlooked. Have a cash flow scenario perhaps for acquisition purposes. It's definitely something you need. And you need in my head a reality cash flow, which is we have got no more income except for our pipeline coming in. You need a worst case, which is we've got no more income coming in, and we've got another one, which is we're at least hitting budget because we've probably set a bit of a stretch budget. And I used to work with you guys obviously as well, so I know Flow is able to do all those at a couple of clicks of a button, which is great. So you do need different scenarios.
Yeah, and I think that for me is always it always has been from when I taking the way that I used to think as managing partner of an agency and being on a board of agencies for years. It was always for me those what ifs. It was always, well, what if? And it could be negative what ifs. It could be positive what ifs. If you're planning to grow, it's what if we win that new client? Can I afford to hire? Can I get a new account manager? Versus what happens if I lose? And Jake talked about mitigating and thinking about, well, what happens if I lose? What does that look like to my agency? And Float certainly allows you to scenario plan really quickly. Once you've got those base budgets in place, you can then model and compare, well, what if this versus what if that versus what if this? And with furlough and the goalposts changing so often as they have over the past period, those scenarios have been changing all the time. I've got I think it was interesting, Jake, that you'd mentioned that reactive versus proactive, because my favorite anecdote about Float and about scenario planning and cash flow forecasting is that often it can be seen as reactive. Let's say I'm in trouble, I need some help now. And actually for me, the best way to avoid that is to be proactive, is to have that view down the road, to be able to see into the future. And often, this is sort of looks dramatic, but my favorite analogy is that Float is that dashboard and that view down the road, or your cash flow forecast and your scenario planning is, I need to be able to see what's coming at me in enough time to avoid it, and if there's any warning lights happening in my, any bad things happening in my business, I want those warning lights to appear on the dashboard in enough time. I don't want to have to be in the middle of trouble. I want to be able to see that it's coming and be able to model those scenarios and think about those scenarios before it hits. Just
a quick thing on that, Nick. It's like often agency owners want to be able to sleep at night. Yep.
Yeah.
So on the cash flow perspective of it, I'm sat in a board meeting last week where I won't say who and what they do, but basically there is no income at the moment, and there will be no income probably for a while because of unfortunately the specialist area in which they work. But we were able to say, well, everything's okay till start of November next year. because they've got some reserves. The owner kind of knows I've got some runway here, but they don't know how long. You know, so we're sat there in the meeting going, look, don't panic. Like you got to know that you got to invest. If not one penny comes in, you know, you've got a bit of furlough coming through for a few months, you'll find to the 1st of November pretty much. So what does that give? It doesn't give complacency. It gives them the strength to go, well, let's come up with a marketing plan. Let's really think hard about what we're investing in and get on and do it. And, you know, we've got some money to do it as well. And we've got time to do it properly. So, you know, start of next year, I know already, you know, it'll be full tilt at the marketing strategy. You know,
provide a bit of certainty and enable you to plan with a bit of certainty.
Give some time, yeah.
I'm just conscious of time. We're approaching 3 o'clock. I've just dotted this up because we do have a promo on at the moment. Like, we are working really heavily with agencies at the moment. We've got a lot of really great content out there on the Float website if you want to go and check it out. We've also got an agency promo running, which is a 6-week extended trial specifically for agencies. If you visit this address, you know, please go and have a look at this. It's totally free. You don't have to put any credit card details in at the moment. Not sure if we've got time for any questions coming through. If we don't, then certainly please reach out to myself at Float, Mark at Cactus, Jake at Outlaw. You've heard sort of where our relative areas of expertise are. Craig will absolutely, you know, help with this as well. I think I've spelt your email address wrong on there, Craig. Apologies. So
I'll sort that.
There's an extra O in the surname, but we're an FSB member as well. So, you know, we offer sort of promos via the FSB as well. So if there's any questions, then we'd love to take them. I'm not sure any have come through the Q&A, but please reach out if not.
None have come through yet, Nick, but I think it's just touching on what you've just finished talking about. I think a lot of the FSB have been kind of lobbying at the moment for late payments, and I think a lot of small businesses don't take that into account. They think that, you know, they've delivered a service, they've sold a product, they're going to get that money at the end of the month, but they don't plan for anything if they don't get that money.
Yes.
And I think that's a key thing that small businesses, especially during COVID, are going to have to take into account, is that, you know, do your scenario. If you get that money, great, perfect, this is what you've got. But if you're not going to get that money, where does that leave you? Because a lot of businesses that they've maybe delivered services are now struggling due to COVID, due to having to furlough, due to whatever. And knowing that, as Mark, I think, touched on, you know, a company that he's dealt with have got like enough reserves till November, but a lot of companies might not be in that position, and they just need to think, right, well, if I don't get paid, where am I covered to? Am I covered to March? Am I covered to, you know, the end of furlough? Because at the end of the day, government help schemes are going to come to an end at some point, and companies need to make sure that when that comes to an end, there is going to be, how much finance do they have sitting in their banks, or how much work do they have to make sure that they are able to survive. So I think that's really like financial planning.
Some of that comes back to, just briefly, I think some people have let processes go out the window because of this pandemic, and it's ruining their businesses. You know, a lot of that comes back to sticking to your processes of invoicing up front. Now, whether if it's on a sprint methodology, you can bill every 2 weeks, can't you, kind of thing. But if it's, you know, if it's a service, yes, it's a service, but you bill up front for it. You direct debit, go cardless at the first of the month. If you can't do that, you slice it up. You can't get it through procurement, you slice it up again. So you can
don't be exposed.
Don't be exposed is the biggest point, rather than it. And I get the point, because I know it might be something we try and lobby with our partnership now with the AIA, but to government, you know, small businesses do get penalised a lot by the bigger brands in terms of payment, and you can't get the direct debits, the chunked up invoices through them. But it's something that's got to change. And I think you're right, Craig. At some point, the government lobbying has got to continue full pelt on this. But I'd still go back to, it's got to be processes first. You've got to get your payment terms in from day one with clients.
The feature that we have within Float is the breakdown of those invoices, so you can actually split those invoices out, so you can understand that you've got an upfront payment and then potentially phase billing of 25, however you choose to break that down. So.
It's funny actually. I mean, process is kind of not the sexiest thing to talk about, but I love it. I think that there's a great quote that says, "Anyone who makes something better is a designer." Right. So even if you can apply your design knowledge to your internal processes. I've recently spent a few days looking at potential issues in the business and what could hamper, that billing process, going right back to internal communications. So I've spent a good wee while totally rewriting our internal team structure to make sure that, like communication lines are going to be tight, which means the quality and timeliness of the work is going to be bang on, which all in all helps you bill right and get the product to people. So yeah, take time and do the really boring work, or get me to do it. I'll jump in.
It's not that boring though. When you think about I think it's really easy. It's really easy to sort of poo-poo this and to undermine what we're talking about a little bit here. But it really is it's the bedrock of running a successful agency. It's the bedrock of running any successful business, is being able to sleep at night, being able to make good decisions based on good data and reliable scenarios. So I think it maybe isn't as sexy as what a lot of agencies do in terms of their output, but actually it enables those agencies to do that well in the first place.
And what does the client buy? They buy an efficient agency that's also very creative.
Yeah.
If you've got a process, you package it up, you name it, you sell it, and you probably get much more value. So yeah.
Thanks very much. Thanks, Jake. Thanks, Mark. Craig, if you want to finish up, I think we're
just
some time.
Obviously, just want to thank the three of you for giving up your time today, for delivering a really interesting and kind of passionate talk on that subject. And I think it is something that people need to be thinking about. We are going to be in hard times. 2021 is not going to be an easy year for people, and I think it just shows people that there is things they can do just to tidy themselves over and just make sure that they belt and brace, as you talked about, processes, finances, things that can just help them improve their business, but also make sure they're still here within the next 12 months. So thank you guys, and thank everyone for joining. And as I say, we'll share this recording through the FSB and through Float. So anyone, we'll make sure you get the link so that you can catch up on it.
Thank you, Craig. And if anyone's got any challenges, please just drop us all a line if you need.
Yeah.
Thank you.
Thank you.
Bye.